Good morning, candidates. This video is on risk management. What are the major risks identified in banking business? Liquidity risk, interest rate risk, credit risk, market risk, operational risk. So what are the guidelines to banks for managing these risks? RBI or ALM guidelines, that is liquidity risk, interest rate risk. RBI based Basel II guidelines, credit risk, market risk, and operational risk. Number one, liquidity risk. Risk to inability of a bank to meet its contractual obligations due to mismatch in inflows, outflows from assets and liabilities. Interest rate risk. Risk due to adverse movements in interest rates impacting profitability. Credit risk, a risk on account of possible default by the borrower. Market risk, a risk of adverse deviations. Operational risk, a risk of loss due to inadequate or failed internal processes, people, system, or external factors. Example, internal, external frauds, negligence, data loss. Exchange risk on account of foreign exchange rates. Settlement risk, risk of counterparty default after the deal is put through and before settlement. Risk management Basel II guidelines. 1988 Basel I Accord put in place of G8 countries, addressed minimum capital adequacy and credit risk, capital charge for credit. 1996 Basel I method, market risk to be identified, quantified, and capital charge provided for. 2004 three pillars of Basel II norms defined minimum capital, supervisory process, market disclosures. Banks to provide capital charge for operational risk also. Now this will come out correctly. RBI guidelines, time frame, Indian banks with overseas presence and foreign banks in India to migrate to Basel II by 31/3/2008. All other banks except RRBs, UCBs by 31/3. Basel norms Pillar 1 minimum capital adequacy. Then Basel II norms 8%, RBI 9%. Pillar 2 supervisory process. RBI supervises through on-site and off-site methods. Pillar 3 market disclosures. Capital charge and capital calculations. Credit risk. Indian banks have to adopt standardized method for calculation as per Basel I RBI guidelines. Here risk weights are assigned as per RBI guidelines approved external rating agencies, and 9% of risk weighted asset is arrived as the minimum capital requirement for credit risk. Market risk, Indian banks have to adopt standardization method as per RBI guidelines. Capital charge arrived at using duration method and capital requirement arrived at by multiplying the capital charge by 12.5. Operational risk, Indian banks have to adopt basic indicator approach as per RBI guidelines. Capital charge arrived at basic indicator method, applying 15% alpha on the average gross income of past 3 positive years. Once capital charge is arrived, capital requirement is arrived by multiplying capital charge by 12.5%. Minimum capital requirement, capital for credit risk plus capital charge for market risk into 12.5 plus capital charge for operational risk into 12.5. सो दीज आर द पॉइंट्स। दोस्तों यहाँ पर रिस्क का मैनेजमेंट का बारे में दिया है, और लिक्विडिटी रिस्क, इंटरेस्ट रेट रिस्क, क्रेडिट रिस्क, मार्केट रिस्क, ऑपरेशनल रिस्क, एक्सचेंज रिस्क, इसका बारे में आप बोलना है। और रिस्क मैनेजमेंट बेसल 2 आरबीआई गाइडलाइंस में भी दिया है, इसका बारे में कुछ इन्फॉर्मेशन दिया है, अंग्रेजी में है, उसको पढ़ के अंडरस्टैंड कर लीजिए। जितना तक आप बोल सकता है आप बोलने से हो जाएगा, खाली आप यही जानने से हो जाएगा। लिक्विडिटी रिस्क, इंटरेस्ट रेट रिस्क, क्रेडिट रिस्क, मार्केट रिस्क, ऑपरेशनल रिस्क, एक्सचेंज रिस्क है, ये बोलने से आपको ठीक हो जाएगा। थैंक यू।